Sri, I'm looking at a board. I'm going to go all William Cohen on you here. David Vinier, who lived 2007, 2008. Peter Oppenheimer, who we talk to all the time. Kimberly Harris, a new board member, Kevin Johnson. What's the spirit of the board if they look, and it's too much to say the train wreck, but just simply the tension and complexity of the underperformance of Goldman Sachs. How's the board respond?
And don't forget the new incoming board member, Tom Montag, at Goldman Sachs for over 2 decades, then at Bank of America, now returning to Goldman Sachs in the board
What will be
role.
the response of the board?
I think they will tell you that the stock does not fall off a cliff. They're okay. They're not getting antsy because over the last 5 years, since David Solomon took the seat, October 1, 2018 to today, Goldman stock has done well. They will tell you they've done extraordinarily well. The reality is they're middle of the pack, and middle of the pack is not a crisis.
This is critical now, and I'm thinking of David Vinier. I have the clearest memories of him and I going back and forth on LIBOR OIS August of 07, and he had that huge responsibility running the ship, essentially, financially at Goldman Sachs. The collective memory on the board at Goldman Sachs, including Mr. Montag, how do they respond to this? Is there like sharp words, or is it like a McKinsey meeting where everybody's planning in a complex way to move forward?
I think reality is no one on the board is going to be very comfortable seeing all the noise and the headlines coming out of Goldman Sachs. But what they ultimately want to see is stock performance. They want to see that they're on target to achieve some of the goals they've set out. There's obviously been strategy turnaround, some 180s they've done on their retail banking strategy, but they have committed to a new strategy. As long as they can deliver on that, the board will be content and okay. It doesn't look like anyone on the board is thirsting to make a change right about now.
Where's the growth going to come from in the new strategy?
Well, that's important. A lot of analysts, some of the analysts at least, have called this a kitchen sink quarter. Try and throw out all the bad stuff in this quarter because the numbers are really bad. Return on equity, 4%. How does that compare to some of the peers? It's the worst among the big banks. You have JP Morgan posting 20% return on equity. So that's not good. And you've had a few consecutive quarters of Goldman missing on its profitability goal, which is a mid-teens ROE. So the question is, where does the growth come from? You know, and we heard James Gorman talk about this yesterday. Gorman said investment banking, the trough in investment banking has arrived. It's going to look up going forward. When capital markets reopen, when deal making goes up again, you can be rest assured that Goldman will be in a good place, and they will look to point out the increasing durable revenue growth in their asset management business.
It seems as though the banks that are most diversified and largest have been benefiting the most from the recent enthusiasm, at least over the past few weeks, of bank shares. How is Goldman going to try to appeal to this? Or are they going to say, no, we essentially are a niche markets-focused bank. We tried our foray into consumer banking. It didn't work.
No, they'll certainly not say that. They tried a different tack. They said we're a very good investment bank in trading and banking, but we're going to expand into retail banking. We'll make that as good as our investment banking franchise. That clearly didn't happen. You wasted a few years going deep into that space and now trying to retreat. But now they're talking about the two pillars, the investment bank and the asset and wealth management business. And that is the one place that they can hope to show growth going forward.
Color there, I think it was page 6 of the presentation, very clearly laid out. Commercial real estate has challenges. What is their uniqueness in commercial real estate versus the other major banks?
Quite a few important things, right? Investments where they have operational control. They're mostly tied to commercial real estate, about $10 billion of investment there. They took a $500 million hit there. They have equity investments, a lot of it through principal investment.
Like a skyscraper in Singapore, just as a generalization?
From offices to warehouses and everything else that falls under the commercial real estate rubric. They have about $28 billion in loans in the commercial real estate space. So that's about 15% of their total loan portfolio. So they've taken some hits there. They've taken hits on the equity investments and also on what they call their consolidated investments. That's contributed to about $1 billion hit this quarter. Their hope will be they're not taking any more write-downs going ahead, and that's really important for them and not entirely in their control as well.
Headcount has gone down by about 5%, I believe, based on the latest assessment. How much more does it have to fall?
5% year to date. 8% is probably another figure to look at because that's year on year, doesn't include the new analyst batch intake. One would think that they've done the biggest exercises needed. They haven't come out and explicitly said that. And if they do need to take more action, that tells you there's a lot more bad news to come out of there. So they will certainly be hoping that they do not have to take any more headcount actions. They've already done 3 different rounds in the last year, and that doesn't show great management, frankly.
Just taking a step back, we did just wrap up the earnings cycle in the big banks, and it seems as though the themes are deposits cost something, particularly if you're a smaller bank. Credit is contracting on the margins, and credit cards are the sweet spot. How would you wrap that together to push it forward and say where this is going for the next quarter?
Yes, all of those points are true. Credit is perhaps contracting, but look at the commentary that we've gotten from some of the big consumer banks. Look at what JP Morgan kept telling us. Charge-off rates are going up. It'll probably end the year at 2.6% on their credit card portfolio. They keep repeating this is a normalization, not deterioration. This is normalization post the pandemic. They're not that concerned. So if you zoom out, the economy is not as bad, or at least the trajectory does not appear to be as bad as 3 or 4 months ago. So if that holds up, the consumer stays okay, Main Street remains okay, Wall Street opens up with the return of capital markets, that'll only mean continued good news for the big banks going ahead.
You're going to be out at the U.S. Open, Tennis Open here. There's like the Grey Goose Pavilion or whatever it is. Sri holds court there for like 3 weeks or whatever.
Projecting.
It is. What's going to be the chit-chat at the Grey Goose Pavilion at the Open about what would Tom Montag do? Here's this force of nature. I've dealt with him at Davos, love him to death. What an interesting guy. Is this just like a moment, or is this going to be a big deal where he steps in?
He's a force of nature. We've obviously seen a lot of commentary around this. Reality is, at least based on our reporting, and I know some other people disagree, but Goldman had been in conversation with Tom Montag for several months
Who'd
before
been in
the recent
conversation?
noise.
Is this Solomon dialing 1-800-SAVE-US?
It's at least Solomon dialing 1-800-Tom Montag. He's in the past told me he's one of the greatest partners at Goldman Sachs. He's made an effort to court Tom Montag over the past few years, brought him back into the famous Goldman Sachs retired partners dinner, something that Montag had been avoiding for several years.
Sure, Bank of America,
David Solomon certainly brought him back into the fold. And in the last several months, he's led the effort to bring him onto the board. And remember, he is a big, prominent voice when it comes to risk expertise, and that is still a big engine at Goldman Sachs.